That important questions of retirement, take it out.
Yes, ma'am.
Yeah. Before that, in the last class, we were in which question, dear? We finished.
Ma'am, we completed the whole slide, ma'am.
Yeah, oh, okay, fine. That's what I just want to know. Okay, fine. Okay.
Yes, ma'am.
So, Kavi, Ravi, Kumar, and Guru were partners in a firm, sharing profits in the ratio of 3:2:2:1. Okay. So, what is the old ratio of Kavi, Ravi, Kumar, Guru? 3:2:2:1.
Yes, ma'am.
Yeah. On 1st February 2017, Guru retired. Okay, who is the retiring partner among the four? Guru. He is retiring. He is leaving the firm. And new profit sharing ratio was 3:1:1. So always you should be alert. New ratio is given, old ratio is given. Then you should apply the formula for calculating what? Gaining ratio. New ratio minus old ratio equals to gaining ratio. So now this new ratio 3:1:1 is for Kavi, Ravi and Kumar, because Guru is retiring. So the remaining partners are Kavi, Ravi, Kumar, and their new ratio is given 3:1:1. On Guru's retirement, goodwill of the firm was valued at rupees 3,60,000. So this is goodwill of the firm. Again, you should be clear. It is not goodwill of Guru. Guru is the retiring partner, but goodwill of the firm is given. And what the question is asking? Past journal entries for treatment of goodwill on Guru's retirement. So you have to pass the journal entry. Before passing journal entry, what you have to do? You have to calculate what? Gaining ratio, because old ratio, new ratio, both are given. So you should use the formula and you should calculate the gaining ratio. So gaining ratio equals to new ratio minus old ratio. Don't write NR, OR and all in the same way KR, KG. This is only for me, okay? You have to write the full form. Kavi, Ravi, Kumar, Guru, everything in full form. Yeah. So, yeah. Now we are going to first calculate gaining share of who? Kavi. So what is the new ratio for Kavi given in our question? 3/5. 3/5. 3/1 by mistake I have written. You please write it down 3/5. It's not 3/1.
Sure.
Yeah. Minus old ratio is given in our question itself. 3, 4, 5, 6, 7, 8. So 3/8. Now just take the LCM 5 and 8. You will get 40. Then you know na 24 minus 15. All these are basic maths. You will find. Yes. Kavi is gaining. In bracket I have written G. G means gaining. S means sacrificing. So whenever you are calculating gaining ratio, suppose minus is coming, it means it is a sacrifice. Always remember, whenever you are calculating gaining ratio and minus sign is coming, means it is a sacrifice. Now 9/40 is a positive figure, so it is gain. Kavi is gaining on Guru's retirement. Now what about Ravi? The same formula apply. New ratio minus old. New is 1/5. Old is 2/8 of Ravi. And take the LCM and do 8 minus 10/40. It is 8 minus 10/40 means minus 2/40. Okay. So minus. The figure is coming in minus, negative figure. So what I said just now, whenever the figure comes in negative, that is minus, it is sacrifice. Okay. So in bracket you can write SS shows sacrifice. Ravi is not gaining anything. Ravi is sacrificing. Kavi is gaining. Ravi is sacrificing. Then what about Kumar? So new ratio of Kumar is 1 by 5. Old ratio of Kumar is 2 by 8. So 1 by 5 minus 2 by 8, again the same, 8 minus 10 by 40 minus 2 by 40. Again Kumar is sacrificing. So out of 4 partners, if you see, 3 are the remaining partner, 1 is the retiring partner. Among those 3 also remaining partners, only Kavi is gaining. Rest, that is Ravi, Kumar, both of them, they are sacrificing their share. They are not gaining, they are sacrificing on Guru's retirement. And Guru is always a sacrificing partner. In retirement, whoever is retiring partner is always sacrificing partner. He gives his share to the remaining partner and leaves the firm. So always remember, whenever we are doing retirement, you should keep in mind retiring partner is always a sacrificing partner. And remaining partners, they may gain or they may not gain. You will come to know only when you calculate gaining ratio. So in this question, what you are observing? Only one remaining partner, that is Kavi, is gaining. Rest of the remaining partner like Ravi, Kumar, they are sacrificing. Very important question. In boards, this type of question comes, and this is board question only. Now what you will do? Always you have to remember, okay, always when this type of question comes, suppose like no, it is not a normal question, okay, suppose it is a normal question, Kavi, Ravi, Kumar all are gaining partners, it becomes very easy for you to calculate the gaining ratio, right? If the denominator is not same, you will make the denominator same and you can easily calculate the gaining ratio. Then you know the formula for giving goodwill to the retiring partner, gaining partners capital account debit to retiring partners capital account. It becomes very easy. But why this question is difficult or hard? Here, can you calculate gaining ratio? No. In order to calculate gaining ratio, all the 3 remaining partners should gain. But only one partner is gaining. Rest of the 2 remaining partners are sacrificing. So you cannot calculate gaining ratio here. Sachin, till here it's clear, dear?
Yes, ma'am.
So what to do? See, here comes the main point. You have to learn. When you are passing journal entry regarding the goodwill, always remember in this type of question, which is a special type of question, here you can't calculate gaining ratio. So, see, whoever is gaining, you can write it down as important note. In this question itself, write it down. Whoever is gaining, the gaining partner's capital account, you should debit. First thing. The sacrificing partner's capital, you have to credit. In this question only I am talking. So in this question, if you see, only Kavi is gaining. So Kavi's capital account debit. Don't write any amount. First try to understand. So Kavi's capital account debit. And what I said, the sacrificing partner's capital account, you have to credit. In this question, remaining 2 partners, they are sacrificing their share. And the retiring partner, he always sacrifices his share. So if you see, total 3 partners are sacrificing their share. Who are those? You have to credit them to Ravi's capital account. Don't write RK, okay? You write the full form. To Ravi's capital account, to Kumar's capital account, to Guru's capital account. Don't write any amount. First, the journal entry is clear, Sachin?
Yes, ma'am.
And write it down, dear, as important point. Both this type of question is being asked, so kindly write it down, okay? This is a special type of
Sure,
question.
ma'am.
Yeah. Now
Yes.
Now in this type of question, what you have to do, see, always you have to take total goodwill of the firm. Only in this type of question, okay? Remember, whenever you are not able to calculate any gaining ratio or sacrificing ratio, in admission also this type of question is there. I will make you afterwards, okay? When we will do the revision, I will try to cover those questions after finishing the syllabus. Don't worry. So,
Yes,
now in retirement, you can write it down as important point. Whenever we are not able to calculate gaining ratio, like in this question, it is impossible to calculate. So first what you have to do, always again I am repeating, you have to first debit gaining partners capital account, credit sacrificing partners capital account. This is the first concept in this type of question. Second, you have to always take total goodwill of the firm. So you can write it down as important point, step 1, step 2 in this particular question, so that you don't forget, because this is entirely different question. This is not the normal question. So step 1, you have to debit gaining partners capital account and credit sacrificing partners capital account. You can just write it down. And step 2, what you will write? You have to always take total goodwill of the firm when you are not able to calculate gaining ratio. Write it down in this way. We have to take total goodwill of the firm when we are not able to calculate gaining ratio. Then step 3, what you are going to do? Now you are going to write the amounts. Kavi's capital account, total goodwill of the firm is how much given in our question? 3,60,000. Show the calculation also in working notes. So Kavi's capital account equals to total goodwill of the firm 3,60,000. Okay, in this 3,60,000 you have to multiply Kavi's gain, that is 9 by 40. So 3,60,000 multiplied by how much? 3,60,000 multiplied by 9 by 40. Just solve it. You will get 81,000. You can just check it whether you are getting or not. And you have you have to show it in working notes. Okay, each and everything presentation you have to show in working notes. Then the second, that is all the 3 that sacrificing partners. To Ravi's capital account, the same rule applies. Goodwill of the total firm 3,60,000 multiplied by Ravi's share of sacrifice, that is minus 2 by 40. You can take 2 by 40. You will get 18,000. Are you understanding, dear?
Yes, ma'am.
Yeah. In the same way, to Kumar's capital account, the same 3,60,000 total goodwill of the firm multiplied by Kumar's share of sacrifice 2 by 40, same 18,000 will come. And now the retiring partner, to Guru's capital account, total goodwill of the firm 3,60,000 multiplied by Guru's sacrifice 5 by 40. So 45,000. When you add all these 45,000 plus 18,000 plus 18,000, these 3 partners are sacrificing, only 1 partner is gaining. So 81,000 it will automatically come. You can check everything whether it's coming, not coming.
Yes, ma'am.
Yeah. So is this question clear?
Yes, ma'am.
Have you written the steps?
Yes, ma'am.
Yeah, and write it down, very, very, very important, okay? Because this is a special
Sure.
question. Yeah.
Yes.
Yeah. Now the next. A, B, C, D were partners. Question is clear in PDF. If some amount is not clear, let me know. I will dictate that, write it down, dear, if it's not clear.
Sure, ma'am.
Yeah.
Sure, ma'am.
Yeah. A, B, C, D were partners sharing profit in the ratio of 1:2:3:4. Now there are 4 partners A, B, C, D, and their old ratio is given 1:2:3:4. D retired. So who is the retiring partner? D. And his share was acquired by A and B equally. So how much his share is? 3, 3, 6, 10. 4 by 10. So D's share is 4 by 10. Now who is getting this? A and B. Again you should be very clear. C is not gaining anything. By reading the question, something should come to your mind. So A, B, C, D, 4 partners. Old ratio given 1:2:3:4. D is the retiring partner and D's share 4 by 10 is taken or acquired by A and B. Equally means 4 by 10 multiplied by half will be taken by A. A is gaining that much. Again if you see for B, 4 by 10 multiplied by half. Till here the question is clear, right?
Yes, ma'am.
Yeah. Now goodwill was valued at 3 years purchase. So you have to calculate the goodwill. Amount of goodwill is not given. they are asking you to calculate how goodwill was valued at 3 years purchase of average profit of last 4 years, which were rupees 40,000. Okay, so last 4 years profit, average profit is given in your question 40,000, and they are telling that goodwill should be calculated at 3 years purchase. So first, how you will calculate goodwill of the firm? Goodwill of the firm equals to average profit multiplied by number of years of purchase. First, write down the formula. Okay, goodwill equals to average profit multiplied by number of years of purchase. Then you can write average profit is given in our question 40,000 multiplied by number of years of purchase is also given in our question 3. So 3 or 40,000 multiplied by 3, you will get how much? 1,20,000. It is not 12,000 dear, it's 1,20,000. Okay?
Yes, ma'am.
Yeah.
Yes, ma'am.
So just do the corrections. It is 1,20,000, not 12,000. Now,
Sure.
after that what you will do, you have to calculate D's share because he is the retiring partner. D's share of goodwill. Now we got total goodwill of the firm 1,20,000 multiplied by D's share 4 by 10. So when you do this, you will get 48,000. That is D's share of goodwill. D will get 48,000. But again you should what? Be alert. D will get this 48,000 only from two partners who are gaining A and B. C will not give anything to D because C is not gaining anything from D. So now when they are asking you to pass the journal entry, how you will pass? See, who are the gaining partners in this? A and B are the gaining partners. What is their gaining ratio? It is 1:1. How you come to know? Because they are taking D's share equally. So they are gaining equally. Whatever share is left, the D's share, that is taken by two partners A and B equally, means their gaining ratio is equal, 1:1. Are you understanding?
Yes, ma'am.
So now what you will do, you know what is the journal entry for this goodwill? Gaining partners capital account debit to retiring partners capital account. In our question, A is capital account debit, B is capital account debit to D's capital account. D is the retiring partner, and how much D's share of goodwill? 48,000. Who will give? A and B, because they are gaining and they are gaining equally. So 48,000 multiplied by half, A will pay 24,000, then 48,000 multiplied by half, B will pay to D 24,000 in this way. So first a journal entry also, please write the proper format, date, particular, ledger folio, amount, debit, credit, narration. Okay,
Yes,
do it systematic way, don't do like this. Okay.
Sure, ma'am.
Yeah. If I am going too fast, tell me Sachin, I will slow down. Are you able to write everything?
Yes, ma'am. I am able to write.
Okay. Don't hesitate for anything. Okay. If I am going too fast, tell me ma'am, be little bit slow. I will be slowing down.
Sure, ma'am.
Yeah. Now the second journal entry. Because why we are moving to second journal entry? General reserve showed a balance of rupees 1,30,000. So general reserve balance is given, and what is the concept about general reserve? It comes in the liability side, right? And general reserve is always distributed among the old partners, old ratio. Always old partner, old ratio. In retirement, all the partners are old, including the retiring partner. He is also old partner only in retirement. So whatever the partner will get, retiring partner also has share in it. Now what will be the journal entry for this? General reserve account debit. Again, don't write GR, write the full form. General reserve account debit. How much? 1,30,000. All the four partners, they will get this general reserve. So you have to credit them to A's capital account, to B's capital account, to C's capital account, to D's capital account. And this 1,30,000 will be distributed among these four partners in their old ratio. 1,30,000 multiplied by 1 by 10. A will get 13,000. Then again in this way, the 1,30,000 multiplied by 2 by 10, then 3 by 10, then 4 by 10. In this way, 13,000, 26,000, 39,000, 52,000. When you add all these, you will get 1,30,000. So this 1,30,000 general reserve is distributed in these amounts to the old partners in old ratio. Any doubt in this particular thing?
No, ma'am.
Okay. Now again the question, what actually the question is asking you, and D's capital in the balance sheet was rupees 3 lakh. So D is the retiring partner. His capital balance is given 3 lakh at time of D's retirement. You are required to pass journal entry. We already passed journal entry, and prepare D's capital account on his retirement. Question is asking to pass the journal entry and prepare D's capital account. So journal entry we passed. Now one more journal entry will be left. But for writing that journal entry, you have to first prepare D's capital account. Okay, so in journal entry you can just leave some space. One more journal entry will come, and in the next page or after leaving some space, you can prepare the format of D's capital account. Yes.
Yes, ma'am.
Yeah. Debit, credit, particulars, rupees, everything with proper format prepare. Now what we are going to do, see, D's capital balance is given in question 3 lakh. You have to write in the credit side of D's capital account. By balance brought down, how much? 3 lakh rupees. After that, the general reserve which the D is getting, his share of general reserve, that will also increase what? D's capital. So by general reserve, how much D is getting? You have passed the journal entry for that general reserve. 52,000 D is getting his share of general reserve. So 52,000. Then A and B, these two gaining partners, they are giving D's share of goodwill in gaining ratio to D. So by A's capital account, D is getting from A 24,000 his share of goodwill. Again D is getting from B his share of goodwill 24,000. They are gaining equally 1:1. So in this way, D should get from firm, partnership firm, 4 lakh on date of his retirement. Now this 4 lakh, write both the sides, put double underline in order to what? In order to close the account. Now in the debit side of D's capital account, you have to write to D's loan account. Always remember, in retirement we have to write the retiring partners, whatever amount the firm needs to make payment to the retiring partner, we have to transfer to loan account unless and until question tell. Suppose the question is telling immediately the cash payment is made to the retiring partner, then you will write to bank account. But if the question is silent, like in our question is not telling whether immediately payment is made or not. Again you can write as important point. Whenever the question is silent about making payment to the retiring partner, always we will assume the amount to be paid to the retiring partner should be transferred to his loan account. Kindly write it down this. So in our question also nothing is mentioned whether payment is made through cash, bank, immediately, nothing. So in that situation, in retirement, always retiring partner's payment is transferred to his loan account. Firm will pay slowly. So to D's loan account. Now it's a liability for the firm. Firm needs to make payment to D and it is like loan. How much? 4 lakh rupees. Understood or having any doubt, Sachin?
No, understood.
Okay dear. So have you prepared till here? Loan account you prepared?
Yes, ma'am, I prepared.
Yeah, okay. So 2D is loan account. Now what is the third journal entry? You can write in the journal entry format. Now D's capital is transferred to his loan. So his capital account is closed and one new account, his loan account, is being opened. So D's capital account debit 4 lakh. to D's loan account 4 lakhs. So suppose the question asks you to prepare balance sheet or show this in balance sheet. So in the liability side you will not write D's capital, you will write D's loan account 4 lakh. Understood? Suppose the question tells you.
Yes, ma'am.
Yeah, so this question is all our board's question only, dear.
Sure, ma'am.
Yeah. So now we are moving to the next question. X, Y, Z were partners in a firm sharing profit and losses in ratio 5:3:2. X, Y, Z, three partners, their profit sharing ratio is given 5:3:2. Their balance sheet as at 31st March 2020 as follows. So their balance sheet is given liability rupees, assets rupees. Balance sheet of XYZ. Always you, as I told you, first you have to always see, check the liability side, any distributable item is there. Creditors, bills payable, yes, profit and loss account. Profit and loss account shown in liability side means it is a profit. This profit old partner will get in old ratio. So XYZ, all these three will get in their profit sharing ratio 5:3:2. Now other things, then capitals, provision for legal claims, not distributable item. Now if you come to the asset side, land, furniture, stock, debtors, provision, patent, bank, no items to be written off is given in asset side. Okay. Now Z retired on above date. So XYZ three partners, among them Z is the retiring partner. These are the adjustment 1, 2, 3, 4. So 4 adjustment is given and question tells you to prepare revaluation account, partners capital account. Okay. So first adjustment, goodwill of firm valued at rupees 80,000. So goodwill of the firm is given 80,000. You have to calculate retiring partner's share of goodwill. So 80,000 multiplied by 2 by 10. You will get Z's share of goodwill. Then land will be appreciated by 10%. Land is an asset. Appreciated means by 10% value of the land is increasing. So what is the value of the land given in our question? 3 lakh. 10% of 3 lakh you have to calculate. That is 30,000. So 30,000 land is increasing. Now the value of the land is 3 lakh 30. So this extra 30,000 is income for the business. You have to show in the credit side of revaluation account by land account 30,000. So just prepare the format, revaluation account and partners capital account. Be ready with the format.
Yes, ma'am.
Yeah. Now the second adjustment, and furniture depreciated at 5%. So furniture is also an asset, but depreciated means there is a decrease in the value of asset 5%. So it's a loss. What is the value of furniture? 10,000. 5% of 10,000 is 500. So in the debit side of revaluation account, you can write to furniture account 500 because it's a loss for the business. There is decrease in the value, so you have to write in the debit side of revaluation account. Now next, provision for legal claim will be made at rupees 61,000. So what is provision for legal claim? Already shown, it is 57,500. So more provisions should be made because now the question is telling provision for legal claim is 61,000, meaning of this. But already the provision is made for 57,500. More provision you should create, which is again a loss. Creating provision is always a loss. So you have to write in the debit side of revaluation account to provision for legal claims. How much? 3,500, because already 57,500 is there. When you create more 3,500, then only in the new balance sheet you can show 61,000. Understood?
Yes, ma'am.
Yeah. Okay. You don't have any doubt? Whatever I am teaching, you are saying yes, yes, you are understanding everything, dear.
Yes, ma'am. Yes, ma'am. I can understand it.
Okay, fine.
As of now, I don't have any doubt.
Yes, dear?
Ma'am, as of now, I don't have any doubt, ma'am.
Okay.
In this concept.
In your school, which chapter they are teaching?
Ma'am, they stopped with, one second.
Yeah.
Uh, Ma'am, now sir has started the first chapter, ma'am. The partnership, ma'am.
Just now, first chapter your sir has started.
Yes, ma'am. Actually, he finished chapter goodwill. He finished, ma'am.
Okay.
Admission of the partner, he has finished, ma'am.
Oh.
Also, change in profit sharing ratio among the existing partners. That three
Oh.
chapters he has finished.
He is going from back instead of
Yes,
front.
ma'am. He said,
Huh.
yes, ma'am. He said first chapter is too lengthy, so we keep it aside. So that's why.
Oh. Okay. Yes, it's really lengthy, very, very lengthy. That fundamentals now, there are a lot of concepts. Fundamental of partnership, really, it's very lengthy. At the same time, lot of concepts are also there. Yes, it's lengthy only.
Yes, ma'am.
Yeah.
So he has finished three chapters, ma'am. Second,
Okay.
third, and fourth he has completed. Now
Okay.
we started with goodwill. First chapter.
Okay. Fine. No issues
Yes,
here.
ma'am.
Yeah.
Sure.
Okay. So now, okay, so this adjustment done. Now fourth adjustment, rupees 90,000 from Z's capital will be transferred to his loan account. Now you have to understand, when they are saying 90,000 from Z's capital will be transferred to his loan account, means first you have to prepare Z's capital. He is the retiring partner. You should see how much he is getting from firm, from remaining partners. If anything he needs to pay to the firm, all these, we will prepare partners capital account. After that, whatever amount becomes due, that is to be paid to the retiring partner. Out of that, the question is telling 90,000 should be transferred to loan, means firm will transfer 90,000 to loan account. Afterwards, firm will make the payment to who is a retiring partner, Z, and balance will be paid to him by check. So total amount what the firm needs to make payment to Z, retiring partner. Out of that 90,000 you have to transfer to loan. Remaining amount immediately through check, means to bank you have to make the payment. Understood?
Yes, ma'am.
Yeah.
And that has to be mentioned with the partner's capital account, the loan which, in the check which they are giving.
Yes.
Sure.
Yeah. Now first see, we are going to prepare revaluation account, debit, credit, particular rupees. So already we wrote. So in the credit side of revaluation account, buy land 30,000, increase in the value of land 30. Then in the debit side, to furniture there is loss, depreciation 500, to provision for legal claim 3,500. Now if you see, credit side is more than the debit side. 30,000 you have to write both the sides, 30, because credit side is more than debit. Then you should close it, you can put double underline. After that, what you will do, how much profit is coming? 30,000 minus 3,500 minus 500. All the debit side losses you have to subtract. Then if you see, the profit comes 26,000. This is the revaluation profit. This will be transferred to old partners, old ratio, which also includes retiring partner, to X capital account, to Y's capital account, to Z's capital account. How much? This 26,000 you have to distribute in old ratio given in our question, 5:3:2. So in this ratio, 26,000 multiplied by 5 by 10, X will get. Then 26,000 multiplied by 3 by 10, 7,800. Who will get? Y will get. Then if you see for Z, 26,000 multiplied by 2 by 10, 5,200. Z will get. So in this way, these profits transfer to all the partners in old ratio. Now,
Yes, ma'am.
yeah, partners capital account you are going to prepare, because the question is asking. So debit, credit, particular rupees. Since 3 partners, so the amount column you have to divide equally into 3, X, Y, Z. Now always you have to write by balance BD, whatever it is given, the capital balances, by seeing the balance sheet. So X 1,20,000, Y 97,000, Z 71,000. Write it down, all the balances, capital balances, credit side. After that, we already seen in the liability side of the balance sheet, there is a PL account balance which you have to distribute. And again I am repeating, if this PL account comes on the asset side, it's a loss. So partners capital account you have to write in the debit side. But since it is in the liability side, it's a profit. You can write it down if you don't know this concept. Whenever PL account appears in the liability side, it's profit. So partner will get profit, so their capital account you have to credit. Suppose this PL account is given in the asset side of the balance sheet, it is a loss. This loss should be paid by the partner to the business. So in the debit side of partner's capital account, you have to show this loss in their old ratio.
Yes, ma'am.
Yeah. Now you can write by PL account, profit and loss account. How much it is given? 22,500. Now you can do the calculations in working notes and you can write. So 22,500 multiplied by the same ratio, 5 by 10, 3 by 10, 2 by 10. You have to do the calculations. So what amount you will get when you do the calculations? X will get 11,250. Y will get 6,750 and Z will get 4,500. When you do the calculations, you will get these amounts. Now, what you are going to do after this? The revaluation profit also the partners will get. So the by revaluation account you can write whatever the profit. X in IX capital account 13,000, Y 7,800, Z 5,200. They will get. That will increase their capital. Then what other things?
Excuse me, ma'am.
Yeah, tell me dear.
Ma'am, actually, in this page, I couldn't see the Z's particulars.
Okay, fine. I will resend it just now.
Sure, ma'am.
Yeah, okay dear.
Yes, ma'am.
Yeah, actually I have given
Now
my
it's clear.
notes for this binding, and what they did,
Sure.
they have just hidden all these amounts. That's the problem.
Sure, ma'am.
Yeah, I will dictate it. Okay, you write it down.
Yes, ma'am. Yes, ma'am.
Yeah. So by balance, yeah, you wrote balance BDPL till where you wrote dear?
Ma'am, one second, ma'am. I'm writing
Okay.
profit and loss.
Okay, I will.
Calculate.
Yeah, I will dictate.
Sure.
By balance,
Yes.
yeah. By balance BD, you can write 1,20,000 for X.
Yes, ma'am.
Then for Y 97,000 by seeing the question. Then for Z 71,000. Given in question only these balance BD.
Yes,
Yeah.
ma'am.
After that you can write by PL account, that is also given in your question, 22,500 liability side. Now you have to do the calculation in working notes. This 22,500 multiplied by 5 by 10, 3 by 10, 2 by 10. The old ratio you have to distribute among partners. When you do that calculations, you will get, you have to credit X capital account 11,250.
Yes, ma'am.
Then Y's capital account you have to credit 6,750.
Yes, ma'am.
Yeah. Then Z's capital account 4,500. These are the amounts you will get when you do the calculations.
Understood.
Yeah. Now by revaluation account, this revaluation account again you have prepared revaluation account and you have distributed the 26,000 profit among XYZ, right? 13, 7,800, 5,200. These are the profits of revaluation. Now this profit will increase capital. So again come to capital account credit side. You have to write by revaluation account. X will get how much revaluation profit? 13,000. Y will get 7,800. Then Z will get 5,200. In the amount column you have to write.
Yes, ma'am.
Yeah. After writing those, if you now you have to calculate the goodwill, how much Z will get Goodwill. So what about goodwill? Goodwill of the firm is given. How much? Goodwill of the firm is 80,000. 80,000 multiplied by D's share 2 by 10. When you do this, you will get Z's capital 20,000. So Z is the retiring partner and Z will get 20,000 his share of goodwill. Now from whom he will get? Obviously he will get from the remaining partners. And in this question, new ratio is not given. If you read the question till end, new ratio is not given. And goodwill is always distributed in gaining ratio, right? In retirement. And if new ratio is not given, what you will do? You have to hide the retiring partner's capital account. No, not capital account. Like when you see the old ratio, like 5:3:2 is the old ratio of XYZ, and Z is the retiring partner. Retiring partner's share 2 by 10. Just hide that 2. So 5:3 is the remaining partner's share, X is to Y. Their share is 5:3 now. This is the new ratio 5:3 and this is the gaining ratio. Are you understanding?
Yes, ma'am.
So now gaining ratio you can say 5:3 because new ratio is not given. Suppose new ratio is given in your question, you have to again put the formula, then calculate gaining ratio, then you have to distribute the goodwill and all. Since in this question new ratio is not given, whenever new ratio is not given, only old ratio is given, always remember just hide retiring partner's share. Then the remaining partner's share you will get. That is new ratio as well as that is the gaining ratio. This is the rule. So now if you see 5:3, X is to Y, they are the remaining partners because that is retiring. So X is to Y, their new ratio is 5:3. Gaining ratio is also 5:3. Now in 5:3 you have to you have to distribute the goodwill. So X capital account debit, Y's capital account debit to Z's capital account. This will be the journal entry because in retirement journal entry for goodwill. What is the journal entry for giving goodwill to the retiring partner? Gaining partner's capital account debit to retiring partner's capital account. In this question, X and Y, they are the gaining partners. Yeah, ask me, Sachin.
Ma'am, goodwill is mentioned as 80,000. Then how we are calculating the partner's goodwill? It should be 80,000 into 5 by 8, ma'am, for the new ratio, ma'am.
No. Why you want new ratio? See, new ratio is 5:3. Okay, you are right. But think, in new ratio, will the retiring partner come? New ratio means what? What is the meaning of new ratio? See, new ratio means,
After the retiring partner.
yeah, after one of the partner retires, the remaining partner, they are going to continue their business, right? In new agreement, in that is known as new ratio. So always new ratio means in retirement you have to forget about the retiring partner's share. Then whatever the new ratio is, it is for the remaining partner where retiring partner will not come. Now you got it?
Yes, ma'am. Got it, ma'am.
Yeah. So now that is the
How we are, yes, ma'am, then how we are getting 10,000 and 6,000?
10,000, 6,000, how you are getting? In goodwill,
Yes, ma'am.
how, see, you would answer me in retirement. Okay, forget about other chapters. Now we are doing retirement. So what is the rule? In retirement, the retiring partner will definitely get his share of goodwill when he leaves the firm. You agree?
Yes, ma'am.
So who are going to pay his share of goodwill in retirement? Tell me to retiring partner. Remaining partner.
Old partner.
Yeah, you can call them as remaining or continuing partner. Okay.
Yes, ma'am.
Okay. So in this question, who are the remaining partners?
A and X and Y.
Very good. Now can you tell me what is the gaining and in this paying goodwill to the retiring partner, the remaining partner will pay in which ratio?
Ma'am, the old ratio.
Not old ratio. There you have the problem. Now you have to write it down. Kindly write it down, dear, as important note.
Yes, yes,
Yeah.
yes.
Yeah. Always retiring partner gets his share of goodwill from the remaining partners in gaining ratio. Kindly write it down. Shall I repeat once again?
Uh, yes, ma'am.
Yeah. Always the retiring partner gets his share of goodwill from the remaining partners in gaining ratio.
Sure, ma'am.
Yeah. Now can you tell me how we got this 10,000 and 6,000, Sachin?
Ma'am, using the gaining ratio.
Yeah,
Right?
and yeah, now what is the, yeah, tell me.
5:3 you are getting it.
You are right. Now how we got 5 is to 3? How you calculated gaining ratio? Explain.
Ma'am, as the new ratio is not mentioned, we have to hide the retiring partner's old ratio.
Very good, very good. When you hide, then the remaining partner's new ratio, that is 5 is to 3, that is, we call it as new ratio because once the partner retires, now the remaining partner will continue the business. So in new ratio, new agreement, everything will change, but business will not change. They will continue the business, agreement will change, okay? Profit sharing and capital, everything will change. So 5 is to 3 is the new ratio and it is the gaining ratio. So now you got it, this 10,000, 6,000.
Yes, ma'am.
20,000 Z will get from remaining partner in gaining ratio. So 20,000 multiplied by 5 by 8. Then 20,000 multiplied by 3 by 8. Just do the calculation. You see whether you are getting 10, 6 or not.
Yes, ma'am.
Yeah. So this is the journal entry. X capital account debit, Y's capital account debit, to Z's capital account 20,000. 10,000 X will pay to Z retiring partner, Y will pay to Z 6,000. Now in partner's capital account you have to write in the credit side by X capital account how much X is paying to Z. In Z's amount column, you will write 10,000 because X will pay 10,000 to Z. Okay? Z's share of goodwill.
Yes.
In the same way, again you have to write by Y's capital account. In Z's amount column, you have to write 6,000 because Z will get from X 10,000. From Y 6,000 has his share of goodwill. That is the meaning of these things. What is the meaning? By X capital, by Y's capital, and in Z's amount column you are writing 10,000, 6,000 and all you are writing, na?
Yes, ma'am.
Yeah, I think 6,000 will not come. I have done some mistake. So you just check the calculation, dear. 20,000 multiplied by 5 by 8, how much it's coming?
Ma'am, for
Huh.
X is coming 12,500.
Okay, and what about Y? Because some mistake I did, I think. Yes, these calculations are not correct. So what about Y?
Ma'am, 7,500.
Okay, so just do the correction, okay? X and Y, you just do 12,500 and 7,500 you said, right?
Yes, ma'am.
Yeah, so by mistake 10,000, 6,000 I wrote. That is not correct. You just do the correction, okay?
Sure.
Okay.
Sure.
Okay, dear. So in that way, then after that, now we are going to close Z's capital account. All the capital account we have to close. So if you see the credit side of Z, it is 96,700. Just make sum total of credit side of Z, retiring partner. 71,000 plus 4,500 plus 10,000 plus this is wrong, 10 and 6, 12,500, and you said 7,500. You write, you will get 90. Are you getting 96,700 or you are not getting that also?
Ma'am, 1 second. Ma'am.
Yeah. You do the calculation. It's wrong, I think.
Ma'am, 1,07,000 is fine.
Okay, do the correction, dear. I have done mistake. Okay, so do the correction and write the correct amount. Whatever you are getting, you just do the addition and do it correctly. Both the side, inserts capital account, you write the same amount and close the account by putting double underline. Then you know what to do. Come in the debit side of Z's capital account. Z is a retiring partner, right? And one more thing, when you write in the debit side, you have to write to Z's capital account, and X and Y capital account you have to decrease, because X and Y in journal entry, X capital account debit, Y's capital account debit, 12,500, 7,500 we wrote na.
Yes, ma'am.
So in the same way, in the debit side you have to write to Z, because to Z, X and Y, they are giving his share of goodwill, 12,500, 7,500. You have to write in the debit side. You have to decrease capital of X and Y. And the question tells that 90,000 should be transferred to Z's loan account. So you can write it down to Z's loan account, 90,000. In Z's amount column, you can write to Z's loan 90,000 as per the question. Question is telling, and the remaining whatever you get, like whatever the total, you just subtract 90,000. I am talking about Z. Then what?
10,700 I'm getting.
Okay. So that amount you have to pay through check. Again, the question is telling the remaining should be paid through check, means you can write to bank, and in Z that amount you can write.
Got it.
Yeah. Now in the same way, X and Y also you can do. Okay, the sum total. You know now how to prepare ledger. This is a simple ledger account only. You know.
Yes, ma'am.
Okay, so the same thing you have to do. Like X, just make the sum total of the credit side. Then X, just subtract that 12,500. Then whatever you are getting, that is to balance CD of X. In the same way, what about Y? In the credit side, add the sum total of Y, whatever amount you have written. Then from there you have to subtract 7,500 Y, because he is giving 7,500 to D, his share of goodwill, not D, it's Z. Then whatever the remaining balance is there, that is balance carried down of Y. So to balance carried down. And Z, he will not have any balance carried down because he is leaving the firm. So in new balance sheet, Z will have no capital balance. Okay, he will have loan. You suppose the question asks you to prepare new balance sheet. So in new balance sheet, liability side to Z's loan, you have to show 90,000. Understood? It's a liability. In future, firm will make payment of 90,000. Any doubt in this particular question, dear?
No, ma'am.
Now you did the correction, right? The amount was wrong. So you did the correction.
Yes, ma'am. Yes.
Okay, so till here today we will keep. In the next class we will do the next question. It's again a big question. It will take time. Okay.
Sure.
Doing half
Yes.
question is just useless. So in the next class, full question we will do. Friday, I think, right?
Yes, ma'am.
Yeah. And how other exams are going? Like accounts, you said you are expecting 50. What about other papers like business study,
Ma'am,
economics? Yeah.
yes, ma'am. Ma'am, today I had my IP exam.
O-
I
Okay.
did really good, ma'am.
Oh,
It is for 17. Expect more than 60.
very good. Very good. Very good.
And day after tomorrow, I am
Huh.
having a BST exam, ma'am.
Oh, so BST, how you're feeling business studies and all economics business, it's good, like you like the subject.
Yes, ma'am. Economics is. I love economics, ma'am.
Oh,
Economics.
huh.
I can understand the subject very well. Business
Okay.
studies, I have to focus more on writing part. I feel
Yes,
I
yes.
should understand and write the theory part very well.
Yeah, yeah, yeah.
Also,
Hmm.
most of the questions for boards
Hmm.
business studies, it's like case study only. Ma'am.
Yeah, okay, okay.
Understanding it, I have to more focus on understanding part. So I feel
Okay.
that.
Okay, okay, okay.
Yes,
Okay.
ma'am.
What about English and other subject?
Ma'am, English is easy only. Ma'am. I have to. I can understand if I writing only I have to focus. So
Okay.
I should write and see how in different ways. So by that I can get it.
Okay, okay. And you belong from
Economics only.
Huh,
Study.
huh, huh.
It's from Chennai only. Ma'am.
You are Tamilian only?
Yes, ma'am. Yes, ma'am.
Okay, fine, fine. You live where? In Perambur. You are in Perambur only?
Yes, ma'am.
Okay.
I live in Pyasa Nagar 4th Street.
Okay, okay, fine. Suppose Golu, if I keep at home, we are in joint family, I will call your mother, you come with your mother, okay? We will meet.
Sure, ma'am.
Yeah.
Yes, ma'am.
Okay, if we are keeping Golu, I will let you know. I will call your mother, you come with your mother,
Sure.
okay?
Sure, ma'am. Yes,
Yeah.
ma'am.
Okay, thank you, dear. Thank you.
Thank you, ma'am.
Yeah, yeah.
Thank you.
Yeah.